Hello and welcome to the Jim Rogers forecast for 2013 to 2015. Now, the questions Jim Rogers was recently asked in a Bloomberg interview was, are you pessimistic or optimistic about the future? What do you look for in a good investment? And also, how do you protect yourself as an investor? So I'm basically going to go through his answers in this video and give my insights on why I believe he answered in the ways that he did. First up, are you pessimistic or optimistic about the future? Now, his answer to this question was, America has an economic slowdown every 4 to 6 years. We had a recession in 2002 and then another one in 2007 to 2008. Now, what he basically says on this topic is the recession of '08 was multiple times worse than the recession in 2002, and the reason for this was because of the amounts of debt that the United States is amassing. So right now I believe that the United States has around a deficit of $1 trillion every year, and this increase in debt is only rising per year, basically because they need enough money to fund the interest on all the debt in previous years. So he says our next recession that we're going to have is going to dwarf anything that we've seen in the past, just because of how much debt that the United States is taking on. And his hard conclusion that he gives is, I am very pessimistic about the future. Next up, he's asked what to look for in a good investment. So obviously everyone wants an investment that is cheap. You never want to buy something at the top. You always want to find something that's forming a good long-term bottom, an overall positive change in this specific area. So by overall positive change, he likes to see advancements being made in the certain industry that you're investing in. So you don't want to see sort of like an industry that has absolutely maxed out its capacity, something that has been around for a long time. You want to see something that sort of is just coming about, that it's still at its bottom, or even if it's not new, it's forming a long-term bottom. You can click the link in the below to go to this specific interview, and you can listen more about why he thinks these are good things to look for in a good investment. Next up, how do you protect yourself? So his first point, obviously, own natural resources. And by this, I believe he's alluding to buy gold and silver, and also various currencies. So he says you don't want to have all your money tied up in the US dollar. You want to have your money in various currencies just in case something happens in one economy, you still have a hedge in a different currency. So he says the Japanese yen is something good to look at. And he also says right now he does own some US dollars, and the reason for this is because the USD is still looked at as a psychological safe haven. Even though in reality it might not be an actual safe haven, it's what sort of the world looks at in terms of being a psychological safe haven. So that's why he currently owns some US dollars. He sees some turmoil continuing to develop in the Europe nations, and bad European sentiment is always good sentiment for the US dollar, because money's just going to come straight out of there and go right into the US dollar. So also on a short-term note for gold and silver, this could be pessimistic for gold and silver, because we all know gold and silver is priced in US dollars. But if US dollars goes up, so if the USD starts rising, that means the value of gold and silver is going to start going down. So be aware of this, guys. I have another video on this channel outlining why I believe we could see sub $30 silver prices once again. So I think it's a great possibility that we could see our metals coming on sale sometime soon. Next up, he's short stocks and bonds. Now, through the Federal Reserve bond buying program, we know that bonds have been artificially propped up for years now. The bond prices continue to go up in almost like a complete diagonal bullish manner. It keeps going up, 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 up every single year. And, to the uninformed investor that looks at that, they'd be like, oh, wow, that's an amazing investment. Just clearly based on previous performance, we can see that bonds always go up. So I'm just going to put my money into the bond market. And another thing that some people might think is those who are of, let's say, the baby boom generation or even older than that, they have lived through one of the most massive bull markets in basically recorded history. They've lived through times that have just been getting better and better and better. The economy has just been rising, rising, rising. So that's why if you're my age, 21, and you have parents that are still set in this mindset of growth and economic growth and everything is going to just continue to get better no matter what. Look at the bond market, it's always going to go up. It's a huge psychological fallacy because they've always lived through good times and they think that this increase will continue to happen into the future. See, I'm not too sure about this. Other informed investors have been calling for a very pessimistic outlook into the future. So, as he states in his third point right here, do your own research. You should never listen to what other people say. You should never take people's word for something. Let's say somebody says this is a good investment. You should always be doing your own research. There's a quote that I like to almost live by. It says, listen to all, but follow none. So listen to what everybody has to say. Listen to all the perspectives. If you're thinking about investing in gold and silver, listen to why people are saying buy it. And then also go to the other side of the fence and listen to why they're saying do not buy it. And then once you have sort of a rational, knowledge to go off of, both perspectives, why people are saying buy and why people are saying do not buy, then you can make up your own decision on whether you think it is a good decision or not. So listen to all, but follow none.